government agency does not want to guarantee their businesses. And I'm asking myself, during the financial crisis, 2008, 2009, the IMF now, in conjunction with the EU, came up with what they call the GTFP, Global Trade Finance Program. Do you know what it was all about? What it was all about. Good day, my name is Dele Ayemibo and you're welcome to another edition of DBA TV, where we discuss everything international trade. In today's video, I'll be talking about how you can mitigate open account risk or payment to international trade using export credit insurance. Export credit insurance is a trade finance instrument that can be issued typically by developmental bank, and by developmental bank, or we call them export credit agency set up by government to encourage export. One of the reasons why a number of developing countries are not growing is because the government are not investing in ways to support the businesses to be able to grow in terms of export. So for example, in many African countries, we need forests, right? And we have challenge with forest and foreign reserve. And currently in Nigeria, this is a big challenge in Nigeria right now. But countries that grow their export, they do not just incentivize export by supporting and giving incentive, sometimes monetary cash payment, to support businesses going into export. But more importantly, they also de-risk the sector. One of the ways they de-risk the sector is through the instrumentality of export credit insurance. So if you are listening to me from countries where your government do not have export credit insurance, you will not be able to do open account or cash against document easily. If you need a loan from the bank is going to ask you for collateral. You need to protect the bank. Why? Because you do not have a way to mitigate the likely risk of using that particular of using that particular payment method called open account or CAD, cash against document. And to think that 85%, according to ICC, 85% of trade in the world is done on open account, meaning I ship the goods, send documents to the importer, and importer pay me afterwards. Knowing fully well that 85% of trade in the world is drawn on that term, any serious-minded country that wants to grow export then must find a way to encourage their businesses to go ahead and do open account, knowing fully well that they will be protected through export credit insurance. Export credit insurance actually ensure the risk of not getting paid, which can be due to counterparty risk of default by the buyer, or political risk of default created by the environment where the exporter or the importer operate. So if you want to export and you're able to get an export credit insurance from an export credit agency, that gives an advantage. One of the advantages is that, number one, you can take more risk. In fact, the reason why many countries do this is to be able to encourage their businesses to take more risk. There's some country that if you do a shipment and you insure your proceed and you don't get paid in 6 months, you can claim payment. Now, because these are credit agency and they are government owned, they can work with other government agency in the destination and be able to get that payment from the buyer. And because it's government have patient fund. They can afford to wait for that buyer to pay whenever he's able to pay in future. In fact, have you ever wondered why people are still shipping to Africa, to Nigeria, despite the issues of foreign exchange in Africa, in African countries? Have you ever wondered why? Why are they shipping to Nigeria and Africa? Even though there's foreign exchange challenge, the only reason they are doing that because their government encouraged them to do that. How does their government encourage them to do that? The government ensures the risk of not getting paid. So even though some of them might take 5 weeks, 1 and 6 weeks, 6 months, probably a year, because of forex issue in Nigeria to get paid, they are still shipping to Nigeria. And when you think of the way developed country really take trade seriously, take supporting export seriously, then you understand the reason why the economy is growing. And if you are familiar with the way GDP is being calculated, you know that export is an integral part of that calculation. The more the export you do, the more the GDP. This also explains the reason why the developed nations, the powerful nations, the nation with the highest GDP in the world are more often than not the nations that are exporters. Top economy in the world: US, China, Germany, Japan. Do you know these are the top 4 exporters in the world? They keep changing the position, particularly Japan and Germany. But US and China are always 1 and 2. Sorry, China 1, US 2 in export. In import, US 1, China 2. In the world. In the world. So they want their citizens, their businesses to keep exporting. That's why people will see export to Ukraine. People will see export to Israel. People will see export to Russia. People will see export to Venezuela. People will export to Sudan. People will see export to some troubled countries with political economic risk. Why? Because their government have created an insurance to ensure the risk they will not get paid. This is why government of developing nations, underdeveloped nations, must take this seriously and support, capitalize those organizations to be able to have enough resources to issue this insurance instrument to protect the businesses. If we don't do it, then the business will not grow. So if you are listening to me in a country where you have export credit insurance, then you can easily go ahead and do open account. You can go ahead and ship. Because of the insurance, banks are willing to fund you. Pre-shipment inspection. Banks are willing to fund you. Post-shipment inspection. That means you can actually do more volume. That means you can actually minimize the challenge of cash flow. Why? Because you have credit insurance to protect yourself. So the next time you want to ship and you need to deal with open account, which means you will ship the goods, send document for the buyer to clear the goods and pay you afterwards, and you are looking for a way of protecting yourself, ask the export credit agency in your country. In Nigeria, we call it Nexim Bank, Nigeria Export Import Bank. Ask the export credit agency, do they have export credit insurance? Then subscribe and provide the appropriate document and pay the premium, and that will help you to be able to access that facility. I hope this video has been of immense benefit to you. You know, I've spoken a lot about how to solve the problem of payment in letter of credit transaction, in open account transaction, and I've given different examples. And this example I gave now is on export credit insurance, which I think many businesses need, and I think countries in Africa should begin to do this to protect their business. After all, a number of these monies are stolen by politicians. So why can't we use some of them? You know, that's why sometimes when government agencies are running away from risk, government agency does not want to guarantee their businesses. And I'm asking myself, you know, during the financial crisis, 2008, 2009, the IMF now, in conjunction with the EU, came up with what they call the GTFP, Global Trade Finance Program. Do you know what it was all about? What it was all about was to guarantee their businesses that any LC they see from Africa, they should go ahead and ship. If the LC fail, they are guaranteeing payment. Why are they guaranteeing payment? They need the businesses to keep shipping to Africa, because if the businesses don't ship, they will shut down. If they shut down, they will lose job. They lose job, they will not be a popular government. In order to ensure that the government is popular, they solve the problem of their businesses. I hope African countries' government will take a cue from this, that we will be able to have export credit insurance to be able to ensure that exporters in Nigeria are able to ship with minimal risk of not getting paid. My name is Dele Ayimibo, and I'm your export doctor, and I'm signing out.